They've been bullish for quite some time, starting back in March. Okay, March. And look what happened with price. Okay? The indication was there for the move to the upside. How's it going, fellow traders? It's Magic Trader here, and this is your CFTC report for the data that was reported on June 27, 2023. As we always do, here's a brief snapshot of the positions held by the institutions as of that date. And welcome back for another one. Welcome, we're in July now, half the year has passed. And so we're going to take a look at the positions held by the institutions to see what they've been doing recently to try to get a determination on what price is going to be doing in the coming weeks and months. So let's start by taking a look at gold. All right, gold, look at it, gold. All right, so we see a decrease in long positions, okay? And this has been taking place since the highs that we reached back in May. Ever since then, there's been a decline to 220,000 from 266. Remember when price was back up here, I said don't go long, okay? Price broke up to new highs, but I told everybody don't go long. That would be the worst thing you could possibly do. And the reason being was because there was no evidence to suggest that price was going to continue higher. And the euro was massively longed. The banks needed to offload those longs. And we knew that there was going to be downside pressure when that took place. So that's what took place. I said, watch, they're going to start taking their long positions off as well on gold, and then we're going to see a decline. So that is what's been taking place. Okay? So this is profit taking on long positions is what we've been seeing. Another thing that I'll point out to you is if we take a look at the coloration of the cells here, we'll see that there's nothing special going on here. They're primarily blue, okay, which means neutral. So that means the sentiment on gold is neutral. Therefore, I wouldn't be overly excited about taking positions either to the upside or to the downside at this point. There is downside pressure because of what we're seeing on the charts, but right now you should really be neutral. Okay, now let's switch over to oil. What do we see with oil? Look what we have here, ladies and gents. Just recently, they've been increasing their short positions to a point where they are now becoming aggressive. Do you see this, the last couple cells here? The last few cells? Shorts used to be in very cooled off territory back here in May, April, but now we're getting into aggressive territory with shorts. And so this is taking place right here, okay? Right here. Price dropped, came into demand, and has been slowly shifting downwards, okay? Not any great momentum here, but a slight downside pressure. Bottom line is if we take a look at the coloration of the cells here, they're a little bit red, okay? That's the bearishness, but there's more blue in here as well. So I'd hold off on taking any positions with oil at this point because there's nothing very clear for us to trade, okay? So again, this is neutral. I wouldn't be trading oil. I don't like the way that the chart looks, and there's no direct pressure either to the upside or to the downside with respect to the positions held by the institutions. So we will move along. The dollar, okay? Take a look. Look at longs, look at shorts. What do you see? All I see is a sea of blue, okay? And it's been like that for quite some time, okay? Since the beginning of the year. Right? All year it's been blue, meaning neutral. And remember, I pointed this out. Okay, I told you when this was taking place. And look at price action. It's done nothing. Yes, it's rallied up and it's contacted our institutional supply area here that we located. And look what happened. Supply came in and drove price to the downside. It's since just been coasting sideways. So we have a ranging market with the dollar. And positions are not indicating what direction we are going to head in next. So when it comes to direction, I am looking more towards the euro to help us to determine that. What I will point out here, and this is of importance, is this right here. You see the last few cells? They're turning more green. That means there's more bullishness coming into the market, okay? more bullishness. And that's interesting because with the euro taking profits on long positions, we are expecting to see more downside. So this has got a good correlation with what we're seeing with the euro. All right, let's move along. Now we have the Aussie, and again, they've been focusing on short positions for quite a long time. Adding shorts, taking profits on shorts. Adding shorts, driving price lower, and then taking profits on those shorts. And recently, what did we see? A big increase in shorts, okay, 90 to 113,000. Then they took off those positions, which causes the move of price to go upwards. And now 84,000, and we see a drop. So nothing much going on here. You know, the important thing to remember is that we got institutional demand that's in play. And based on the coloration of the cells, they've been in a bearish cycle for a long time now, okay? They've been in a bearish cycle for a long time. But a bearish cycle, while price is reacting to a demand zone, it's not something that I would like to trade at this point. Because if demand is in play, I want to see the banks accumulating a long position, all right? Retail traders, 62% of them are long, okay? So there's no great bias in any direction right at this point with respect to retail's positioning. All right, so we move along. What do we have? USCAD. So just recently they bumped up their short positions, okay? But this is at the very lows of price. This is all the way down here, okay? So to get price down here, you'd have to be increasing shorts, right? We just recently had contracts expiring over here, and look what they used those contracts expiring for, okay? They bumped up their positions quite aggressively with the shorts. But take a look at the coloration of the cells here. You see what's going on. Starting to turn blue. They were recently bullish, all right? But now they're starting to turn blue. Is this going to switch to bearishness? Who knows? What I can tell you is demand is in play. Our targets to the downside have been reached. And now we have demand in play. And guess what? Retail traders are adding aggressively to long positions, all right? They've been adding as price was dropping, okay? Visual representation is this. They were adding to their longs, okay? If longs get into like the 90% range, then I'm suspecting that we're going to see an increase in price, okay? So that's what I'm looking at. This is what I see. And but in terms of longs and the bank's positions, look, they were aggressive back here. They were aggressive back here. Recently, they haven't been aggressive. So I'd like to see these numbers start to build for there to be any real sustainable momentum to the upside on the USCAD. Okay, so we'll be watching for that. US Swiss, longs and shorts cooled off, not much going on. Price rallied up into supply, and then we see a slight decline. Okay, not much going on with this pair, so it hasn't been very exciting for me. Last few cells are cooled off. Okay, they're blue, which means that they're cooled off. There's no any specific bias on this one. Retail traders are 80% long. Okay, which tells me that if they get in more long, then price is likely going to start heading higher. All right, that's about it for that sucker. Let's go over to the euro. Here's an interesting one. So I've been warning everybody that the banks are going to offload their long positions, right? How long have I been saying that for? For quite some time. Remember when positions were at 260,000? Right. What are they at now? 223,000. So you see, I told you it was going to happen before it happened, and now you can see with your own eyes that it is exactly what took place. Why? Because the logic that I applied to figure out what's happening is correct. When the logic is correct, and the outcomes will be exactly as you had forecasted. So as you can see, shorts, they're not focusing on shorts. Look, they're doing nothing. They're cooled off. That's why the coloration of these cells are blue, is because there's no focus on them, all right? And of course they're not going to be focused on them because they're focused on offloading long positions. So the thing is that when you look at what retail traders have been doing, they've been taking on those long positions, right? Right now they're at 43% long, but that used to be a smaller number, okay? It's not to the point where I'd like them to be for us to see some sustained move to the downside, but this is where we're at. We contacted institutional supply not too long ago, okay? So the pressure on price will be to the downside, okay? Especially with the banks needing to offload their long positions, it'll put downside pressure on price. So I am watching for a move lower to take place, and we just gotta sit still and be patient with it, okay? But remember, we are in a distribution within a bullish cycle. This is a distribution phase within a bullish cycle. So they're offloading long positions. So it's not really the best time to get into positions. I am positioned right now with the euro, and I've made mention of this with our students. But they know the risks involved. They know how I entered. They know where my stop losses are. They know how I'm going to be managing the trade. So all that is being managed. All right. But typically, if you want to go long, you want the banks to be accumulating along. If you want to go shorts, you want the banks to be accumulating a short. And right now, they're distributing a long position. Okay? All right. Good. Let's go over to the next one. Pound US dollar. What do we see? A big increase in long positions. Okay? Look, longs have been the main focus here. And recently, they increased them from 76 to 101 and to now 104. Okay? Price is near the highs here. Very close to an institutional supply area that we located. This is a supply area that the banks used to drop price down a while back. And so we have determined if price was to get up into this area, we would see a drop form from that area. Okay, but we have fallen short of hitting it. And with longs getting so aggressive, you know, we may just see the spillover start to take place before that supply comes into play. All right? But again, they've already accumulated a long position. Now they need to offload that long position. Right now, retail traders are mostly short. And so if price is going to drop, the banks don't want them to be mostly short. Unless it's up in the 85 to 90 or 95% range. And then they'll likely push price to the downside because that's the breaking point of retail traders at that point, okay? So we're watching this one to see how things play out going forward, but there is a bias of downside pressure. And I know some of you will say, well, but Kevin, you know, we see the coloration of the cells here and they're turning green here, so shouldn't that be bullish? They're only turning green because they are aggressively adding to long positions. They're only aggressively adding to long positions to get price to rally up, which has already taken place. So in my opinion, the move has already taken place, okay? At some point, they're going to have to take profits on those long positions, and that's going to fuel a move to the downside, okay? US dollar, Japanese yen. This is a beautiful, beautiful, beautiful chart. Our targets have been hit, okay? Targets have been hit. Aggressive with long positions here. Okay, look, they've been bullish, for quite some time, starting back in March. Okay, March, and look what happened with price. Okay, the indication was there for the move to the upside. Now we see aggressive positioning. Aggressive. They're going to have to take some profits at some point. We're contacting supply right now. It's a great area to see a move to the downside form from. So this is what we're watching for. Retail traders are 70% short right now. 70% short, so if they get in more aggressively short, then I'd expect to see price turn over and drop at some point. Okay? Okay, it could happen any time. So watching for that as things unfold. And last but not least is the Kiwi. We look at the longs. Longs are cooled off. Shorts are pretty much cooled off. Let's take a look at the sells here. The bias. The bias is a little bit red, a little bit blue. You know, nothing good enough to make any trading decisions off of. Okay? It would have to be clear, and it's not clear. What I could see is that we got supply in play, so there is pressure to the downside at this point. Okay, last thing is if we look at retail traders, they're about 75% short. Okay, so I want to see them increase those shorts more to the 80, 90 part, you know, around there, that percentage. And then we'll likely see a drop in price once they, you know, are maxed out on their positions. And that's it, ladies and gents. Thanks for joining me again. If you want to learn how we do our analysis, how we locate supply and demand, come to www.whiteoakfx.com. There's lots of information there, lots of free information. Join our Telegram. Our numbers just keep on growing. Our students, we just keep on growing. The school keeps on growing. Everybody's realizing that what we have to offer is real, it's unique, and you'll get something out of it. So come and join us, and we'd like to see you in there soon. All right, take care, enjoy. So long.